All right, let's get right into it here. Market is up or down about 0.1% on the S&P. It looks like Nasdaq is down. Semiconductor, however, continues to make a move here. Pretty much only green on the sectors here today. 1.6% positive. Look at this. Looks like Apple's down, Google's down, Tesla's down 7%. However, Nvidia, AMD, and SMCI, these guys continue to make a move here. You can see Bitcoin and Ethereum will continue to make a move. Bitcoin is up about 11%. However, it's pretty selective here. As you can see, not all Bitcoin or the crypto miners are Riot is down 6%, 7%. Same with the CLSK, Mara. However, MSTR is up 23% today. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed on Friday, right? So as you can see, we closed right here and we slightly gapped down this morning. However, quickly found support here and pretty much spent all day long here to fill this down gap from this morning, right? Finally got filled on the, looks like on the 3rd hour. Pause on the 4th hour and possibly a little, you know, bull pennant or bull flagging pattern, kind of little squeeze there on the 5th hour. And then you can see the last hour. So all these micro term traders went long here. It looks like they're selling on the last hour. And then we did throw that bearish engulfing candle on the last hour. This one seemed as though it could potentially ensue some kind of a short to micro term panic, just because it looked like we're gonna do this, you know, the move, flag, and then a breakout move, and then we abruptly saw that last hour sell-off, and you can see we pretty much have shaved top here, shaved bottom with the long bearish candle. So I think if we do see a follow through to the downside tomorrow, and bulls do need to break below the micro term, or the bears do need to break below the micro term to target 509, 508, because that's the up gap area. Huh? Last time here, early February, see that downturn? What kept this rally going was that micro term. Perfect. Even we did see what it appeared to be a bearish candle there, but there was a micro term. So we did see another 1 day or so of a kind of market floating around before coming back down finally. But every time, however, every time when we lost the micro term, again, that's the aqua there. See right here, down gap. See right here? See, bears understand. They don't want to deal with the micro. The market is so bullish that micro terms are a lethal element for the bears, because the micro term is so loyal to bullish cause. Only way bulls can battle with the micro term is gapping it down. You see gap down, right? Even when we got up here, you see that micro term acting as support here. Micro term acting as support here. Micro term acting as support here. So in the last 2 occasions when bears did see any sort of downturn for at least a day or two, it needed to happen. It happened with the down gap. It happened with the down gap, down gapping below the micro term. A drippy move, it doesn't really work. It worked last time it played, you know, bears trying to bring it down in a drippy way, and then bulls quickly reclaimed the micro, and then they brought right back up, you see? Perfect. So I think the best bet here for the sellers is gapping it below the micro term, right? And sustain the down gap, and then come back down to retest 509, 508. That's where the up gap is, and that's where the short-term moving average currently residing at about 508 or so.
Decimal points, high frequencies, bang, 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 fucking digits.
If bulls either gap it up or we find support in the micro term, bring it right back up, then we're right back to the micro term game here, where the micro term can provide support like it did in early February here and or here, and then we bulls can bring it up for another day or two.
Perfect.
Right? Check out that oscillator. And so the oscillator has crossed down. Oscillator has crossed down. And this is a vicinity, because again, the oscillator is at overbought zone, right? Anywhere in this, with the top of his band is the overbought zone. And that oscillator has crossed down because of that last hour move. And so I drew that line here. Every time when that oscillator crossed down, we did see some sort of micro term downturn, meaning could be a day or two. This was like a day. This was 2-3 days. This was drippy 2-3 days, and have that oscillator sort of fully reset. Except the fact that only this time here, you see right here, where we had that oscillator coming down a little bit, finding support right on that micro term, and then bring it back up, and then rally for the next 1 full week. So if this thing comes down a little bit, retest a micro term here a little bit here like this, right above the micro term, and then that oscillator gets back down just a little bit and goes right back up, that could be another week or so of a bullish term. Bearish candle is because bulls were running out of the steam. Bulls were tired. Bulls are hitting that overbought zone all day long today. So with that oscillator cross, bulls are looking to have that oscillator reset. And only question remains then, is that oscillator going to come back down a little bit and then make another leg higher? Or are we going to see, if we do see like a down gap, and this is, I'm now drawing arrow where there was actually a down gap. If we do see a down gap, like market gaps down below my micro term currently residing at 511.55. Again, that's the aqua right here. If we do see a down gap, then we could see probably at least continuation move. So we could, if we see a down gap and that down gap, stays unfilled, we could witness continuation to the downside throughout the day tomorrow underneath the micro term until bulls can reclaim their micro term and come back for you. We'll reassess the situation. Enjoy your evening globe trading tomorrow.